Hello and welcome to the Citi Talks Payment Series. My name is Lola Adebanji, and today I'm joined by Oscar Berglund, who's the CEO at TrustMe. Oscar, thank you so much for joining us today.
Thanks, Lola, for having me.
Can we start off, if you could maybe give us a brief background to yourself and to your company, TrustMe?
Sure. I joined the world of payments, 7 years ago now when I joined TrustMe, January 13. Before that, I was actually part of the board of TrustMe as well. But I started out my career in investment banking, and then I was at an asset management firm for 5 years before getting into payments. And I've been the CEO of TrustMe now for 4 years or so. And TrustMe is basically a way of paying online, an alternative to the card networks. Instead of paying with a payment card, you basically just pay directly from your bank account. So we offer a service for merchants to accept payments from their consumers, as well as for merchants to get payouts out to their customers, i.e. their consumers.
And I guess given TrustMe is very much one of the leading fintechs in the space around bank transfer payments for e-commerce. Can you tell us a bit about what sort of trends and behavioral changes you're seeing from both merchants and consumers in the current environment during the pandemic and even now as we're sort of getting out of it?
I think there are two types of trend we're seeing. The first one is obviously pandemic related, where you have had, of course, this kind of shift of commerce moving online quicker than maybe what people expected. And that's obviously been driving our business, although we have a quite diverse set of merchants. We also have merchants in industries that have been pretty badly hit by the pandemic, for example, the travel and airlines vertical. So I think that shift from kind of physical stores to online commerce is a clear one, and it's something I think most people are aware of. For online banking payments in general, there's kind of a couple of more longer term trends that are important. So firstly, of course, is the general shift from cash to digital payments. But then secondly, another key trend for us is the fact that the way you authorize and sign bank transfers has become increasingly convenient over the last couple of years. So as you may remember back in the days when you had long passwords and PIN codes, or you had a physical kind of piece of hardware dongle so you need to use to sign up a bank payment. Increasingly now banks are moving into mobile apps that are biometrics kind of powered. So instead of kind of dealing with a lot of passwords and dongles, you kind of put your fingerprint in a mobile phone. That's where you sign a payment. And that's obviously provides a better user experience. And I think it's driving a lot of the adoption on the consumer side of online banking payments. Then a second kind of key trend for online banking payments, I think, is the kind of the transition to real-time clearing settlement of bank payments. Because the problem historically with bank payments has been that initiation of the payment didn't necessarily mean execution of the payment. So there was a kind of risk for non-settlement for the merchant. And increasingly as kind of real-time clearing settlement of bank payments is implemented, then that risk obviously is mitigated. So I think those are kind of two kind of broader trends that were valid even before the pandemic, and I think will remain valid for quite some time to go, and that are relevant for online banking payments.
Great, thanks, Oscar. And I hear your point around the authentication getting easier and that in itself driving more adoption. I know TrustMe, you're also operating in the US as far as I understand, and the US has, as we all know, has historically been a very card-centric market. So help us understand, how are you seeing the US landscape changing from an online banking payment for e-commerce perspective? What sort of adoption are you seeing? What do you think is driving that? And how is the payments landscape changing from that perspective in the US?
You're very much right in that the US has been a very card-centric market, I would call it. There are a couple of things happening though. Firstly, I think there's a kind of mainly a younger generation who are not as kind of hooked to the cars and the kickbacks from the cars as maybe some of their kind of older peers are, and who are increasingly open to pay by other means, including not using plastic at all. And this same kind of consumer segment is also increasingly already interacting with the bank accounts in different contexts. They may be using Venmo for P2P payments. They may be using, ACH to withdraw funds into their trading accounts and the like. So increasingly, people are kind of getting used to interact with the bank account and making payments to the bank account. Historically, for e-commerce in the US, the challenge has historically been the fact that with ACH, you have this kind of a risk for non-settlement in between initiation of the funds. Execution only happens later. We have addressed that in not the same way as in Europe, but we address it in Europe as well. In the US, we address it by means of basically offering an upfront guarantee to the merchant that they will get the payment, the guarantee of funds, if you will, upon initiation, with a very high approval rate. And that, I think, has been one of the missing links for online banking payments, really making it into kind of e-commerce context in the US. So we have that offering now, and we see great demand on the back of that. In addition, of course, you need to make it as easy as possible for the consumer to use the service, and there we have taken a lot of steps towards optimizing the user experience. We're connected into 6,000 plus banks across the US, so that they really bringing down the amount of manual entry and manual kind of entering that the user needs to do to absolute minimum. So I think that's really a second key pillar for building something that works in the US. And then thirdly, we're coming from kind of enterprise payments background. And if you're an enterprise merchant, you would expect to have the same kind of functionalities and services as you have if you accept card payments in terms of reporting, reconciliation, support, those kind of things, and we offer that as well. I think the combination of these three types of kind of value adds, if you will, on top of the SH network, has allowed us to basically create a product, build a product that fits very well with merchants as well as consumers. I think the last point to consumers, I will mention it, that if you look at kind of, again, mainly the young generation, everything happens in real time. If you're on social media, you interact with someone, you get a real-time feedback, what have you. The kind of the concept of making purchases and making payments and then only getting an invoice in the mail at the end of the month I think it's increasingly alien to a lot of people. You want to make the payments, you want to kind of see it reflect your bank account pretty quickly, and that is really what we're offering as well. So all in all, we're seeing very good traction in the US as of now.
That's very fascinating to see, because we certainly hear a lot of merchants are starting to want to look at those alternatives, and it's interesting to see that that's starting to take shape in the market. And I find that concept interesting as well, where you talk about the upfront guarantee to the merchant. I think that's something that, of course, a lot of them will find very valuable. If we pivot a little bit to Europe, and I want to talk a little bit about open banking in Europe. As you know, it's very topical and continues to be topical right now. Markets like the UK and the Nordics have seen more traction in terms of their development around open banking. But we've also seen open banking really more developed from the data aggregation perspective, payments initiation, which is the other use case, if you will, that open banking supports, still seems to be quite in its infancy. Does TrustMe leverage open banking in Europe? I'll be interested to get your views on that, and also your views on payment initiation via open banking. Are we likely to see adoption on that, and what is likely to drive that adoption?
I think it's fair to say that payment initiation, it already is a pretty proven concept in many countries across Europe. We process 10 billion euros annualized plus of payments. Other providers out there, in some countries, it's very well used. I think you're right in that in the UK, it's still in its infancy, but I think the concept as such is already pretty proven in Europe. I think what's needed in the UK, and I think what open banking and more general kind of observation of banking is the fact that the APIs, they need to be able to support a good user journey. The user experience is, of course, key. And I think the recent opinion of the DBA in May actually will get us there. It's taken a few years post PSD2 to get there, but hopefully by the end of the year or so, beginning next year, we should be in a position where the APIs that banks provide actually do enable a kind of the user experience that we need to be able to provide to users in order for them to kind of pick up and adopt to this type of payment method also in the UK. We leverage open banking. I'd say we're interface agnostic in terms of how we connect into the banks. We'll use the APIs if they're there. Otherwise, if banks decide not to offer an API in the PSD2 and offer another PSD2 compliant interface, that's fine with us as well. We use that instead. I think the key thing from our perspective is, and this, I guess, reflects the fact we're coming a bit more from the payment side as opposed to from the data side, is I think that the insight that for a merchant, paymentization is not in itself sufficient. A paymentization is basically just initiate the payment, but you have multiple different things that need to happen after that to actually have a working payment solution. As an example, how does the merchant know that initiate payment will actually settle to begin with? You need to have someone. The way we do it ourselves, we built kind of a system to enable us to notify the merchants very quickly, instantly about settlement of funds. We provide it with refunds. We provide it with the same reporting, reconciliation, and the like that they're used to from collecting car payments. Being able to make FI transactions, full 24/7 support. All of these kind of things that merchants are used to from the card world, and they would expect from any other kind of payment method as well. And that goes far beyond just the paymentization itself. To mention an example, we have hundreds of bank accounts across European banks, and that allows us to kind of optimize with the routing of the payments. So we can kind of optimize the settlement speed, and that allows them to notify the merchant quicker than, I guess, anyone else about funds being secure, funds being certain. In the same way, we can kind of make sure we can get funds back to the consumer very quickly if it's a refund, if it's a payout. So basically, having these kind of underlying rails, if you will, to really optimize the experience for both the user and the merchant. And so, paymentization is an important component, but there's other things as well that are needed to actually have a fully working merchant-facing payment solution.
Thanks, Oscar. That sounds like quite a number of different building blocks, right? It's not just communication of the payment information, as you said, which the current open banking framework in Europe is somewhat restricted in that sense. A lot of those other kind of components you talked about are not covered under the guise of the regulatory framework. So given that, I mean, what do you think the future looks like for payment initiation via open banking? Is it something that will take off, or do you think the use case around open banking will be very different? And I think as you answer that, if you can do that as well through the lens of, I mean, we've seen in the UK that the UK Tax Authority, the HMRC, has recently actually issued a £3 million open banking tender across data aggregation and payment initiation for tax collections. So with government getting behind this and trying to create a killer app in the UK, if you will, do you think that will help these other building blocks to emerge as part of the framework? Or what does the future look like for open banking if these building blocks are not there?
So I think in the countries where you've had online banking payments for quite some time, and I'm actually less focused on exactly which technology is used to enable online banking payment, if it's open bank, if it's something else. But from a kind of merchant perspective and a user consumer perspective, in the countries where the online banking payments have already existed for some time, it's been adopted very well. I mean, look at the Netherlands, 60-70% market share. And a lot of other countries across Northern Europe, good market shares, not as high as the Netherlands, but 20, 30, 40% consumer preference to pay with online banking payments. So I think the online banking payment solution itself is well proven. It works very well. There's no reason why when you pay online, need to have a piece of plastic. It's just kind of, there's no reason for it. In the same way as from the merchant point of view, there's no reason to pay a multitude of different intermediaries that are kind of part of the card scheme setup to accept payments. So I think from a merchant point of view, it's pretty straightforward. If you can kind of improve your conversion rate at the same time as you may have a more attractive pricing point, that's pretty attractive. From a user point of view, it's about education. In the countries where you have had online banking payment solutions before, obviously that's easier. In call it the newer market, in which I would include the UK, this kind of process verification needs to happen. And of course, these kind of initiatives, any kind of initiative where users, consumers get used to or start interacting with on the bank account is kind of helping out from that perspective. Be it government-sponsored apps or the like, or P2P apps or anything else. All of that we can drive awareness and drive adoption eventually of this payment method.
I guess just one question related to that is, I think one of the gaps, if you will, that's levied by folks when we talk about alternatives to cards and these new rails, providing merchants with an alternative to cards. One of the aspects around what cards provide that's normally talked about is the whole dispute management and giving the consumer that whole that kind of guarantee, if you will, or comfort that if there are any issues with the merchant, I have the chargeback process, there's a defined dispute management process that protects me, if you will. I wanted to get your thoughts on what's the parallel in the online banking payments world, because as merchants kind of adopt these new rails of online banking payments, that's one of the aspects to think about in terms of the dispute management model for consumers. Is that something that you think you will see get addressed, or do you think that's less of an issue in this journey as merchants look to convert their consumers to adopt online banking payments as an alternative?
I mean, it may get addressed, but I almost like to also make the observation that this dispute kind of mechanism were really set up by the card schemes, really for call it a different area, if you will. If you look at kind of the successful online banking payment solutions across Europe, like Adebanji in the Netherlands, they don't have that, and a lot of people are pretty comfortable making payments online without that mechanism, the same way as they are as paying cash offline, where you similarly don't have that mechanism. So it's kind of something that was invented by the card schemes, and it may have its use cases, of course, and you may have consumers, others who prefer to kind of transact within the framework of such system. But you also have quite a few consumers who don't necessarily want to do that or don't really care about it, and they may, by the way, by virtue of the fact that those kind of dispute mechanisms obviously cost money, by virtue of the merchant being able to offer a lower cost payment solution, some merchants are able to forward part of the savings to the consumer. So it may be perfectly rational for consumer to still choose to transact with online banking payments without this mechanism. But having said that, I mean, I think it's really up to the market. There is nothing preventing anyone from kind of creating such call it scheme or mechanism as part of an online banking payment system. And I think it's really, the same way as it was done in the card world was really market driven. You may see it happening on a banking payment space, and then it's up to the consumer to choose, so to speak.
Thank you so much for all the insights you shared with us today. It was really very helpful to hear in terms of the evolution around online banking payments. What are the ingredients for success? How merchants can think about driving adoption, and also how it provides value for consumers and an alternative in an increasingly digital world. So thank you very much for joining us. And to our audience, thank you very much for joining us today.